So today we're going to talk about a story that's quietly made waves in the crypto market, but hasn't really been explained properly. A notorious whale trader, best known for large Bitcoin and Ethereum positions, has just opened roughly a 30 million US dollar leveraged long position on XRP. At the moment people hear that, they immediately fall into one or two camps. On one side, you've got that this confirms it, XRP is about to explode. And on the other side, this is bait, whales get it wrong all the time. And as usual in crypto, both extremes completely miss the point. Because this story isn't about whether XRP is going to go up tomorrow. It's not even about the whale itself. The real story is where this trade was opened on the chart. Because whales don't trade headlines. They don't trade emotions. They trade structure, liquidity, and timing. So in this video, I want to slow everything down and do this properly. We're going to break down what this whale trade actually is. Look at the XRP daily charts, not the noisy lower timeframes, and explain why this position actually makes sense. And most importantly, explain why this does not mean retail should FOMO in. No hype, no moon targets, and no promises, just structure, logic, and context. So let's get into it.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
Before we go any further, a quick word from today's sponsor. This episode is sponsored by Bitchinix, one of my favorite trading platforms. This is an exchange that I personally use, and one of the standout things for me with Bitchinix is how clean and intuitive the platform is, especially their smartphone app. It genuinely makes managing trades on the go simple and stress-free. If you use the link in the description of this video, you'll get access to enhanced sign-up bonuses and trading bonuses. So if you're looking for another exchange to add to your toolkit, check them out using the link in the description and lock in those bonuses while they're still available. All right, back to the charts. Let's start by grounding this story in reality. A large, well-tracked whale wallet opened a leveraged long position on XRP valued at roughly 30 million US dollars. This wasn't a spot buy. This wasn't a cold storage accumulation. This was a directional leverage trade. And that distinction matters more than most people realize, because leverage trades are not about belief. They're about timing and probability. This same trader has historically opened large positions early, sat through volatility, and scaled into trades over time, and often been early, sometimes painfully early. But that is how some professionals trade. They don't wait for confirmation candles on Twitter. They don't wait for influencers to agree, and they position when risk to reward starts to shift, not when it's obvious. And here's where retail often gets caught out. People see a 30 million whale long and they assume that price must go up immediately. That's not how markets work. In fact, large whale positions often appear near bottoms during uncertainty, and whale sentiment is still divided, which brings us to the most important part of this video, which is the chart. Right, let's bring up the XRP daily chart because this is where everything starts to make sense. Ignore the 5-minute chart, ignore the 30-minute chart, ignore emotional noise. If somebody is putting a $30 million on the line, they're not trading candle to candle, they're trading structure. Now, the first thing you should notice immediately is this. XRP has been in a clear descending channel for a long time. Lower highs, lower lows, and a textbook downtrend. Every rally sold, every bounce faded. That's been the environment. But now look at what's changed. Recently, price tagged the lower boundary of that descending channel, and instead of continuation lower, we've got a strong impulsive bounce. This is the first warning sign. When price hits a major structural level and fails to continue, something has changed beneath the surface. The next thing to notice, we've now printed higher lows on the daily time frame. That might not sound exciting, but higher lows are everything. They are just the first brick in any trend transition. Not a bull market, not a breakout, it's a transition. Now look at this move here. Price broke above its short-term bearish structure, reclaiming prior value. That tells us sellers are no longer in full control. Now, very important, this does not mean XRP is super bullish. It means XRP is no longer weak. Then there's a big difference. Let's talk about moving averages. You'll see this yellow moving average on the chart. Price is still below it. That moving average is acting as a major dynamic resistance, and that's why price reacted the where it did. This area lines up with the top of this ascending channel, a major moving average and prior breakdown structure. This is a decision zone. Markets either accept above it and continue or reject and range downwards. And this is exactly the area where smart money starts positioning, not chasing. Now let's look at the momentum. The RSI on the daily time frame is sitting around 50. That's neutral, but context matters. RSI moved from bearish territory back into neutral. That tells us downside momentum is weakening, not strengthening. Now let's look at the MACD. This is starting to flip green. The lines are curling upwards from deeply bearish levels. This is classic early cycle momentum shift. Not confirmation, but a warning signal. This is the kind of signal that doesn't excite retail, but absolutely catches the attention of professionals. Let's simplify all of this into levels because levels are what actually matter to most of you. This zone right here, roughly $2.22 to $2.34, is the most important area on this entire chart. And it also lines up with prior breakdown resistance. If XRP gets a daily close above this zone and holds it, the trend changes, not temporarily, but structurally. Below that zone, and we're still in transition. Now let's talk about support. This area around here, around $2.05 to $2, is crucial. As long as XRP holds above that $2, this move looks like accumulation, not distribution. But lose this $2, and this likely turns into a deeper range or a liquidity sweep. So the market right now is simple. It's asking one question: can XRP reclaim the higher value or not? And that's why this whale trade makes sense. Because this is mostly where people misunderstand whale behavior. Whales don't wait for confirmation. That's retail. That's what retail does. People like me and you. Whales position before confirmation and add after confirmation. They can sit through the drawdowns, they can hedge elsewhere, and they can scale entries and wait weeks or months for a resolution. Most people can't do that. They don't have the discipline. That chart, the bottom of the long-term channel, the daily momentum shifting and sentiment is still divided, is exactly where large players begin testing exposure. That does not mean price goes straight up. It means risk to reward is improving and they're getting braver. And here is the important part. Retail often copies direction, but not time horizon or risk management or capital size. That's why people get wrecked. This whale trade is not a signal. It's just adding some context for you to look at. And context is everything. And this is actually a good point to talk about something important. One of the biggest mistakes people make in crypto is trading in isolation, trying to figure everything out alone, jumping between Twitter opinions and second guessing every move. That's exactly why we created the Crypto Wolfpack. It's our trading community, and it's a group of like-minded people just like me and you who genuinely love crypto. Inside the Wolfpack, we've got complete beginners learning the basics, intermediate traders improving structure and discipline, and full-time traders sharing ideas and market context. There's no ego, no fake screenshots, no hype, just education, discussion, live market breakdowns, and community. You don't need to be an expert, you just need to want to improve. If that sounds like something you benefit from, you can visit cryptowolfpack.co.uk or click on the link in the description to see the full details. Now, back to the market. So let's bring this all together. Here's what actually matters going forward. If XRP can hold above $2, breaks and closes above $2.30 to $2.35, and it holds that level, then the narrative changes completely. That is when the trend traders step in. That's when continuation setups appear, and that's when risk shifts. If it rejects, then we range, we consolidate, and we wait, and that's okay. Waiting is all part of crypto because the market doesn't reward impatience, it rewards preparation. This isn't about predicting the future. It's about reacting correctly when the market reveals its hand. So yes, a $30 million well long on XRP is interesting, but the real story isn't the trade. It's where it happened on the chart. Right now, XRP is bullish, and it's no longer weak either. It's transitioning, and transitions are where the best opportunities are built quietly before the noise arrives. If you found this breakdown useful, give this video a like, subscribe if you're new, and let me know in the comments what you think. Why is smart money positioning right now? Are they premature, or do you think they're onto something? I'll see you on the next one. And remember this, the strength of the wolf is in the pack.